Welcome to the Insurtech Story podcast. Today we are driving into one of the most critical and fast evolving frontiers of insurance, which is agricultural insurance, and how technology is reshaping risk assessments in smarter and more resilient ways. I'm delighted to be joined by Koli Rao, President and Senior Advisor at Aon India Reinsurance Solutions. Sir is a veteran with over 3 decades of experience across insurance, reinsurance, and agricultural risk management, from crop and rural insurance programs to climate risk and ESG. He has been at the center of some of the most impactful transformation in this space. In this episode, we will explore how data analytics and emerging technologies are redefining how agricultural risks are understood, priced, and protected, thereby helping insurers, reinsurers, and farmers alike navigate an increasingly volatile climate. With that, let's get started. Mr. Kohli, welcome to the show.
Thanks, Surya. Thanks for having me, and really looking forward to this conversation because what's happening in India in the agri space truly can change the lives of farmers on the ground.
Yeah, absolutely. And agriculture is such an important topic, contributing a major segment of the economy today. It's very much vital on we understand how and the do's and don'ts and how and where we can, contribute to protect this sector in every which way possible. And of course,
Absolutely.
when we have emerging technologies and how we understand risk and how we perceive insurance, it's one important topic of discussion today.
Sure.
With that, sir, my first question to you is, how are technologies such as satellite imagery, IoT sensors, weather models, and of course with the advent of AI and how it's transforming risk assessment, inclusive of underwriting in the agri-insurance segment, how do you see this where technology is playing a role?
As you rightly observed, the technologies which include satellites, IoT, weather models, and AI transforming risk assessment and underwriting in agriculture insurance in a big way. If you look at how crop insurance traditionally worked in India, particularly prior to PMFBY, it was very coarse and constrained in scope. So though we started in 1985 as a countrywide project with a comprehensive crop insurance scheme, then moved to National Agriculture Insurance Scheme in 1999, there have been a continuous effort to improve the scope and content, and finally arrived the Pradhan Mantri Fasal Bima Yojana in 2016. So we are just moving on greatly. But if you look back, in those years, underwriting was based on historical yield data at the district or block level, which is based on very limited number of crop cutting instruments with limited supervision. And therefore, quite a bit of it is a manual judgment. That meant premiums were often based on averages and administered with the government support coming at back end as claims. And when losses happened, it was hard to say exactly what went wrong and where. What is changing now is that we have much richer set of data and tools. I would be highlighting 3 big shifts. Satellite imagery is one, IoT and weather network the second, and the AI-driven tools the third. So let's take one after another. If you talk about satellites, from a few sample plots to the whole landscape, that's how a satellite captures every pixel. So today, insurers and government can access satellite data with high resolution, high frequency, and microwave that actually pierces through the clouds and provides good coverage even during monsoon periods. So that provides us with which areas are actually sown, how crop health evolves during the season, early signs of drought, stress or flood impact or delayed sowing, or there's something amiss on the ground. So this information is a huge for us, because using that information, we can distinguish between irrigated and rain-fed pockets, even within the village. We can validate whether the reported sown area aligns with what has been visible from the satellite. and we can make more informed decisions on government schemes like PMFBY. So instead of relying on a handful of crop cutting experiments and manual enumeration, we now have something close to a continuous season-long view of what's happening across the entire district. Now let's talk about the second piece, the IoT devices and the weather networks. As you know, automatic weather stations that measure rainfall, temperature, humidity, wind speed, and other parameters, which have been actually were pretty much used starting with the weather-based crop insurance scheme. Then we have the soil moisture sensors. Some projects are using, and sometimes using a combination of public weather data and private networks run by agri-tech companies. So if you look at the risk in India is incredibly local. So two villages 5 kilometers apart can have very different rainfall patterns, very different weather patterns. If your product is based on a district weather station or a sub-district weather station, your payouts might not match the farmer's reality. So by building denser weather station networks and blending that with the satellite and model data, insurers can capture the microclimate more accurately, design better weather index insurance products, and reduce basis risk. That is a mismatch between what the index is and what the farmer actually experiences. Now, third one is the AI tools we mentioned. AI is the one which connects the dots. We can now combine historical yield and claims data, long time series of rainfall and temperature, satellite-based vegetation indices, data on soil type, topography, irrigation practices. So using these, we build models that estimate expected losses far more scientifically, give risk scores at village or even sub-village level, identify hotspots where drought, flood, or pest outbreaks are more likely, and even flag anomalies or potential fraud where reported losses don't match what satellites or weather stations observe. In India, where we have a large number of small-sized land holdings, ground data is often patchy. So these AI-driven insights are helping insurers move from very rough average-based underwriting to something much more granular and data-driven. So in short, we are moving from a world where we had a few data points once a season to a world where we can monitor risk continuously and at scale.
The insurance element here, what's really strikes me is how agricultural insurance is kind of moving from hindsight to foresight. And you mentioned very rightly on the satellite imagery, even on the IoT part, and of course when we bring in the advanced weather models, combining with how AI is evolving, I think risk management is kind of no longer based on a broad assumptions anymore or historic averages, but it's getting more real time, field, which is kind of a field level intelligence, right? So clearly the shift is kind of not just improving your underwriting or claims, but fundamentally aiming to change the role of insurance from paying for losses to, say, actively helping farmers or insurers manage and reduce the risk in a far more volatile climate. And yeah, Mr. Kohli, one very interesting case study which I came across, that Aon has implemented along with Oxfam and Ethirisk for Sri Lankan paddy farmers. I think it was being notified, or press release was done in 2019. Any thoughts about that if you're aware of the implementation?
Thanks, Surya. I don't have a fair idea of what Oxfam and Aon did on this, but I can actually rely more on our Indian government, the large programs we are implementing here in India. So, as you know, I mean, traditionally, where crop insurance or other forms of insurance existed, probably, the ideal way is indemnity based, that, at farm level, if there is a loss suffered by the farmer, he gives an intimation and the surveyor goes, assesses the loss and pays. That's the best ideal. But we know, as I said earlier, that we have a special circumstances which makes it difficult for us to really look for index insurance. Although in the PMABY, we adopted a very innovative model of PMABY plus. That is, for localized calamities, we are trying to assess those losses at the farm level. So we are trying to bring the best of the indemnity and the parametric or index into the PMABY program. So if you talk about parametric or index-based insurance, this flip the logic here. So what happens here is the payouts, which is tied to a measurable parameter like rainfall, temperature, or satellite index. And these parameters, if they cross agreed or pre-agreed threshold, the payout is triggered. So no one needs to physically inspect the fields. So this is how it is working for weather-based crop insurance. And yield index, though many of us don't call it parametric, but actually it is a subtype of a parametric insurance because we're using yield index. So what happens, like why we actually chasing them, why we are using them on large scale? There are a few important points to look at. One is the speed, the speed of getting money to farmers when they actually need it. So let's talk about the big advantage of speed, which is very important because the true value of insurance lies in fair and timely payment for the losses. So speed is an important element. We have to really bring it into the product. Under older models, especially where you depended heavily on crop cutting experiments, claims took several months, even years to settle. But with parametric products, as soon as the data for the risk period is finalized, say rainfall for the season, or a satellite index over a defined window, or the STEC, which the PMABY uses, probably with idea to get the yield data faster. So the system can automatically calculate which areas trigger the claims and how much. This means claims can be processed in days and weeks instead of several months. Then payouts can go directly into farmers' bank accounts using DBT or similar mechanisms. For a farmer, that timing is critical. Insurance money that arrives during or just after a bad season can mean he buys seeds and fertilizers for the next crop. He avoids distress selling of assets. If it arrives 6 or 12 months later, even a year later, the impact is far lesser. So that's the kind of the beauty of the speed. The second one is how objective, transparent the rules are set for designing these indices. So we have third-party weather stations, we have public data, we have synthetic data, we have gridded data, we are generating yield data through satellite or STEC. So now we have to make sure that we develop indices which are closely related to the actual loss on the ground, which are able to capture the loss on the ground. So that's what creating objectivity. Farmers don't depend on whether a survey visits a field or not. They know the trigger in advance and they can see at least in principle whether it has been met or not. So backed by these good communication like SMS updates, village meetings, dashboards in local language can make move from a system that feels opaque at present to one that feels rule-based and predictable. So this is the second aspect of the program. The third one is the basis risk, honestly, which is a biggest challenge any parametric or index insurance faces in the world. The basis risk arises when index shows no trigger, but farmers actually suffered a loss. Maybe for a variety of reasons, Maybe the product design is such it couldn't capture, or maybe the weather station is far away. The weather witnessed by the farm at the farm is different from what the weather station recorded. So technically, the product may be doing exactly what it says, but from the farmer's perspective, it feels unfair. So therefore, what do we do? It's impossible to take the basis risk out of parametric insurance. What we can do best is minimize or reduce the basis risk. So the way we can do it is installing denser weather station networks. For example, the government of India through WINDS project is encouraging setting up weather stations much denser at granular level, higher resolution, even radar or microwave based satellite imagery, blended image blended indices that combine weather with vegetation signals, and regular product reviews to check did the index actually capture the real pattern of loss this season. So communication is a key here as well, apart from the technicalities. Being very clear about what the product covers and what it doesn't is very important, and that should be very clearly communicated to the farmers. Using ground level entities like we have FPOs, CSCs, NGOs, and we have input suppliers. So if we can use the services to explain the product in very simple terms is a very important aspect. And also feel sharing actual performance data. For example, if you give what happened last season, for example, there is a drought in particular district, and a farmer who bought the insurance got X amount of money as a compensation. So that actually is a proof of concept. So that's very important. So over time, when farmers see money arrive quickly in barriers without having to chase paperwork, trust in insurance and in the data behind it begins to grow.
Absolutely. You mentioned very categorically on the parametric and index based insurance part. So, in what ways is parametric and index-based insurance powered by real-time data? Improving claims accuracy, speed, and trust among farmers. Of course, you have covered a significant part of it, but if you could just touch upon on some of the ways that you're seeing this transformation happening.
Yes, Surya, just like any other program, this digital program innovations, digital agri-insurance has challenges, but we need to work to overcome the challenges to ensure that we reach out to every nook and corner of the country, and almost all farmers have access to insurance and have the insurance safety net protecting them. So let me group the challenges into three parts. One is the data. Second one will be a technology and operations, and third one will be a broader ecosystem we have here. So if you look at data, all the advanced modeling and satellite work we described earlier will sit on top of historical yield and claims data, weather records, land and crop information. In many districts, yield data is incomplete, inconsistent, or even exists on papers. Weather station coverage is not always dense enough. Land records and actual cropping patterns often don't get perfectly aligned. So without solid data, even the best AI can give misleading answers. So what we need strong public-private data partnerships with government, IMD, private weather station networks, agri-tech firms, insurers. Then we need systematic digitization and standardization of historical land records, crop records, and anything related to agriculture. So we are lucky the government of India has actually embarked on this project. A large number of states have already achieved, and there are few states, probably it is a matter of few years, where we probably have a kind of a parcel level survey number wise a land record totally digitized. Then, of course, there have to be investments in digital and geotag plot registers, which, as I said, the government is already working on it. so that each farm is mapped and linked to a correct farmer and the actual crop which is planted. So that's the data foundation we need. Once we have this, then going to the next step is relatively easy. So if you look at on paper, the tech stack looks fantastic. Satellites, sensors, AI, mobile apps, great. But on the ground, we still deal with patchy connectivity in many rural areas, lower smartphone usage among older farmers, and varying levels of digital literacy. So, digital agriculture insurance can't be designed only for a perfect 4G or 5G smartphone world. It has to be multi-channel, like, should be able to use SMS, IVR, IVR assisted enrollment at bank branches, CSCs, FPO offices. Then offline first, apps that work in low connectivity areas are very important. And very simple in design and language, again, makes that much simple. So that explains the product. Now, let me also talk about, when we use the models, the technology based models, we are answerable. It's not just like, a model is developed, we are implementing, this is what the program is. So when we do the design of the product, when we do the pricing and claim decisions are made based on the complex models, the government has a right to ask, how does this model work? Is it fair to farmers? Can we audit definitive? So it's important that the insurers or whoever was building these models, they build it in a as much transparent way. And also there is a documentation to back test them. Ideally, some independent validation that would actually bring in a lot more confidence. And then there is economics, like the premiums per farmer relatively small. So, but in India, we have the government support. We have a large number of farmers coming into the program. So everything works out actually per farmer pretty much cheaper. And more and above that, actually, we are so good and so lucky that government of India invests heavily in the public development and developing the sector, that a continuous effort is going on to overcome the challenges, to make it absolutely aligned. Entire real-time information is made available at a click of the button, and we know exactly what farmer is growing, on how much area is growing, and what is likely to produce, what is likely to arrive at the market. So these are the important developments, I think, which will go very well with the programs we are talking about. And talking about finally the ecosystem and the behavior. For a variety of reasons, the initial crop insurance schemes, the farmers looked at them as a kind of an attachment to the crop loan, or as a government program, but not a risk tool they proactively chose. Consequently, despite government's huge support and largely compulsory nature of the insurance program, we are still struggling at about 30 or 35% crop area penetration. With government fully supporting, providing the subsidies as much needed, I think every effort should be made to reach out to every farmer who's growing crops which are prone to one or the other risk. To change this, we need consistent financial literacy and communication in local languages, strong success stories, which is a very important thing. I repeat, for example, we have instance like last year, there is a village which got paid quickly because of drought, because they got insured themselves. So that actually is a very important message we can, and that's something farmers trust, those kind of examples and success stories. And then, of course, using the trusted local partners like FPOs, CSCs, cooperatives, input dealers, explain the product will be a very important value addition. So we because we have a great network of banking institutions, and a huge amount of loans are being given to the priority sector agriculture. So we have a very good kind of alignment within the banking sector, financial inclusion, and the use of technology. So the alignment across top to bottom is happening at a faster speed. I'm sure a couple of years down the line, probably I think everything which really counts gets connected using these, the technologies and the innovations. So they play a very important role, and I think we are on the right direction here. So the but at the same time, I would say, I mean, while we certainly encourage, we go on overdrive, but we also make sure that all that innovations have a clear guardrails, um, to make sure that we are doing the right things, and also protecting farmers from unfair or overly complex products, and give a strong, stable, long-term signals to the insurers, reinsurers, and investors who can confidently invest and work on a long-term basis in this space.
I think you have made some of the very valid points there, and to close, I would just want to reflect on how technology led risk assessment, parametric, which you have mentioned, stronger data ecosystem, together will determine how effectively agricultural insurance really can scale, build trust, which is a very important element, and of course deliver on resilience for farmers across the emerging market. And I think it's worth to explore how these themes really come together in practice, starting with how satellite data, IoT, weather intelligence, AI can really reshape risk assessment and, of course, underwriting at a farm level. With that, Mr. Rao, it's a fantastic discussion, and thank you for sharing your thoughts today. It was a real pleasure having you on the show.
It's my pleasure, Surya. Let me cap it up. What
Yes,
technology
please.
we would see. I mean, we would like to see a technology playing a big role for agri risk management. So technology is not about making products more complicated. It's about making them more reliable, faster, and fairer to the farmers. So when we achieve this, I'm sure, I mean, the next level in the agri risk management, and India would be a kind of a torchbearer.
Absolutely. Very well stated there. And with that, to all listeners, thank you for listening to this important episode on a very important aspect of our economy, which is agricultural insurance. And we hope to see you in our next episode. Till then, take care and stay safe. Goodbye for now.
Right. Thank you, Surya.